Welcome to the Retire with Peace podcast, the podcast where we help you create a fulfilling and stress-free retirement. Each week, we bring you expert advice, practical tips, and inspiring stories to help you plan and live your best retirement life. Whether you're nearing retirement or already enjoying your golden years, this podcast is here to support you every step of the way. Let's embark on this journey together and discover how to retire with peace.
Welcome back to the Retire with Peace podcast. As always, I'm your host, Dave Zaegel. Tax planning is an investment. A little different from tax return preparation. Tax return preparation is a little bit of a hybrid. It really is a cost, but it also can be an investment. For example, you have to have your tax return done, period. One way or another, you got to get the thing done. You can do it yourself. You can try to do it yourself. If it gets a little bit complex, it's definitely worth working with somebody to do that. But either way, there's some cost involved to filing your tax return every year. Now, it can be an investment if, let's say, you're working with somebody who's good, they know what they're doing, and maybe they're able to find some savings for you. I've had that happen in the past. I used to do tax prep for a larger audience. Now I'm focused really just on the financial planning clients that we have. But there have been many times where it was just a tax return only client that we were working with. And maybe they come to us and we look at past returns to get them started. And we identify things that have been missing that could help save them money. And they say, well, you just paid for yourself. And that's great. That in that case, it actually can be an investment where it's like, yes, they're paying us to do the tax return, but we just found them a ton of tax savings. That's awesome. So tax prep is a little bit of a hybrid. It's a cost, but it can be an investment if you're able to find some opportunities in there. Tax planning, on the other hand, is always an investment. If you're paying for tax planning from a professional, that's making you money over the long term. And that's an important distinction because we may not necessarily have an instant savings in taxes. But if we can look at your tax situation over many years and understand what your tax situation is now versus what it is likely to be in the future, we can look longer term and say, okay, over this time period, what can we be doing to save you taxes? Now, it's important. There's a really important distinguish. We just have to clarify this because it gets thrown out a lot. Sometimes people they may go to a tax professional and they say, well, how can I save money on taxes? They go, great. Yeah. If you own a business, let's start a retirement account. You can put money in there and you get a tax deduction and you have therefore saved taxes. Does it save you taxes now? Yes. But if this is in a traditional IRA where you're getting, or a SEP IRA or a 401k, whatever, where you're getting a tax deduction now, are you going to owe taxes on that money later when you take it out? Yes. So is there truly a tax savings? The answer is maybe. The answer lies in what are you paying on taxes now versus what do we think your taxes in the future will be? Now, if you're in a super, super high tax bracket now because you're running a business or you have high taxable income, sure, getting a deduction now most likely saves you taxes over the long term. If you're in a high tax bracket now, chances are, and this is going to vary by individual, chances are you're going to be in a lower tax bracket when you retire and take the money out. So in that case, absolutely tax savings. But I caution this because I've seen far too many people who have been advised to get tax savings now when they are in lower tax brackets. And a lot of times people are so happy, I saved, $2,000, $3,000 because I did this retirement account and this is awesome. I got this tax savings. Wonderful. What tax bracket are you in? 12% or even 22%. And I think, okay, fantastic. You got a discount now. Now it's in an account they're going to get taxed on later in retirement. Is this going to save you money? Again, the answer is maybe. So we have to understand that just because you are saving money now may not mean that you're actually saving money in the long run. You might be sacrificing your future to save money now in some instances. I'm not saying don't ever take tax deductions right now. That's not the point. It's just to understand that if you're going for a retirement account, for example, you don't necessarily always want to be getting a deduction now. You may want to have it grow so it doesn't get taxed later. So tax planning is an investment because we're looking longer term. What we're talking about when you're just trying to save money in 1 year is more of a tax strategy or tactic. It's not really a plan. It's not really looking long term at saving you money. It oftentimes comes down to, okay, what's going to decrease your tax bill this year, which, as we talk about all the time on the podcast, is not always the goal. The goal is to decrease your tax liability long term. And it takes a lot of planning to do that, not just looking at one single year. So when you're looking at taxes, focus on the longer term tax plan. That's where you're going to get a return on your investment, and you're going to save more money long term, not just focusing on right now. We also see this with business owners when they want to buy equipment. Now, when I work with a business owner, I'm very clear. If you need this equipment, yes, let's get it. Let's figure out how to map it out from a tax strategy. Do we want more deduction now? Do we want to depreciate it over time? Could we get more of a deduction now and do Roth conversions with your other accounts? There's lots of things that we can do when we're buying equipment. What I do not want you to do is to buy something to try to get a tax deduction, and that's it. If you don't need it, don't buy it. Save your cash. Like, don't try to get a tax deduction just by spending money. You're still losing. If you need the equipment, absolutely. And then we can do a lot of planning around that. So just, again, a caution around focusing so much on the short term, the tax tactics of the day for this tax year, that you miss out on the long-term tax planning that will truly be a return on your investment. Keep your eye on the long term. Otherwise, you really could set yourself up for something bad in a future year, and you kind of wind up just chasing your tail, hoping that it all works out. Focus on the long term, get that return on your investment out of the tax planning that you need to do.